Morning, everyone. Welcome to this morning session. I'm Paulina. This is Patty.
Hello.
Hey, guys. This morning session is an interesting one, and we feel like it's a very important session to have. It's on measuring and making profit in the business. So we're all here to do a good job and obviously do an amazing job for our clients, but also make some money, make some revenue.
Exactly. One thing we're going to try and hone in on today is how to get visibility over that profit, how to keep an eye on it at any point throughout a job, and just ensuring that, profit is being made at any point in time, and a few little techniques you can use within Streamtime to keep an eye on that. Mm-hmm. We're also interested to engage today in terms of understanding how you guys think about profitability. It is one of those metrics that lots of different people might like to use slightly different ways of measuring. We have a set way in Streamtime of doing that, and we're going to talk through exactly how we measure profit today. But if you guys have some unique methods, or even if you just want to offer up how you guys might look at things when you are taking a look at job profitability or business profitability, what do you consider to be the most important things to look at? We'd love to hear it. And also, at which point through the job are you doing that? Are you, scoping the profitability before you kind of start that job, throughout the job as it's ongoing, keeping an eye on that profitability, making sure it's on track? Or do you wait until right at the end, maybe until those invoices have been sent, and look at how profitable were we in that job in hindsight? Obviously giving you the ability to kind of steer the ship in any direction moving forward. So yeah, feel free to jump into the chat window there and get talking. We want to make this more of a discussion today than a lecture.
Yeah, exactly. As Patty said, we're always keen to hear what you think and how you currently measure your profit. We have our own way, but yeah, it's always interesting to know what how you guys are going around that as well. We also are going to take you through how to actually understand where your team time goes, whether it's billable time or non-billable time, and how to differentiate that and understand that a bit more. So understand where the money is at, and where maybe your team's spending too much time on something internal, and what decision do you need to make in order to actually monetize that?
Yeah, we want to prompt those questions, which are, how much time is my team spending on profitable time, or at least sellable time, billable time versus non-billable, and make sure that you guys know how you can manage that, or at least look after it in Streamtime.
Exactly.
To keep an eye on things.
Yeah, and we'll help you make better business decisions in the future, hopefully.
Fingers crossed.
Yeah, just a bit of housekeeping. Patty already messaged you guys saying if you guys could introduce yourself, would be great, and I could see you all doing that. If you have any questions, just use the ask a question area in Crowdcast so we can prioritize them for you. Mm-hmm. And yeah, any discussion, any ideas, any notes, please just feel free to add them on the sidebar in here.
Cool. And we'll have about 5 to 10 minutes at the end to go through any questions that you guys bring to the table. Might be about profit related topics. Hopefully it is, given that that's why we're all here. But if it's not, throw them in there anyway. We'll see how we go. We'll try to get to them.
Yeah.
Cool. Nice one.
So first of all, in Streamtime, what are the areas where you can actually measure profit of your jobs?
Well, I suppose when we're looking at profit, we can kind of source it from two different places, and they're really the two different things that we need to kind of track any costs on a job. That's obviously time and materials. So we are treating them, expenses, exactly. So we are treating them as two separate things, understanding that they're kind of different in their nature. Time is its own unit. They have an associated cost rate with the team members that are churning up that time, essentially.
Yep.
And then the expenses as well, which is where we'll maybe have costs coming through the business, and we might be marking those up before selling them onto the client.
Yep.
So these are the two areas that we'll look at to start with, and just understand exactly where profit is coming from, the genesis of that.
Yep. And the cost rate of your team is basically their salary.
Exactly. So salary, including overheads, it's the bum on seat cost of that team member. How much does it cost you to have that person in the business for an hour? And we use that hourly cost rate, compare it to the sell rate of that team member on any job. And if we want to look at where we can set this up, we're just heading into the profile and settings area. You will need to have access privileges to the team area and be able to update their access privileges. But we can see in here that each team member has an associated cost rate. So that is where we're going to be pulling that information from. We can see next to it, we have their set hourly bill rate, which we'll see if we decide to price an item by the team member, that's where that's going to be pulled through too. But essentially, at a very basic level, the difference between those two figures is essentially, you know, how much can we afford to mark up the time of our team members, obviously keeping an eye on those overheads in that cost rate too.
Exactly. And it does, I would like to flag that it's really important to spend some time and set this up when you're starting with Streamtime, because it might take a little bit of calculation for you on your side, but very important. Otherwise, we won't be able to produce those valuable insights for you in the future. And you won't be able to understand how profitable your jobs are, or maybe they're not profitable at all. I hope not. So yeah, cost rates, adding those cost rates, very important.
Exactly. And if you haven't already done this, if you did kind of slip straight into Streamtime and start using it without going through the full heavy team setup and they don't actually have cost rates, no need to worry, because if you do go and add a cost rate to a team member now, we'll automatically go and backfill all of the time entries that team member has already entered. So that will go back, populate that data with that cost rate. It'll update it from 0, and then you're going to start getting a lot more value from the system instantly, because we'll be able to kind of consider that cost rate with respect to, you know, the amount that work was sold for, and start giving you some valuable information with regard to profit on a job.
Yeah. And on that as well, if the cost rate changes and we understand some of your team may be getting pay rises,
Sure.
how would it work for all your past jobs? All the past jobs with a certain cost rate, say Danielle is $90 and she just got promoted to $150.
Oh, nice one, Danny.
Big one, yeah.
Serious pay
Good
rise.
job, Danny.
I might even up that billable hourly rate if we're doing so, because we probably need to account for that too.
Yep, awesome. And will the past jobs with the old previous cost rate be updated as well, or will they stay the same?
So they'll stay the same. And that's really important, is obviously we'll recognize that previously Danielle was paid $90 an hour. She's just been given a big pay rise. From now on, all time that is tracked will cost Danielle, or will cost us a business, $150 for an hour of Danielle's work. Versus the previous 90, but we will just take that change from here on in. So it's just that first time that you update the cost rate from a $0 figure that we'll go through and update the backlog of all those time entries, which is essentially just to give everybody a bit more value from the system if you have been using it for a few months without having those cost rates in there.
Awesome. And in expenses area, it's where you would actually set your expenses in advance, maybe in items and expenses, or adding those expenses separately on the job straight away. In order to make some profit, you would obviously want to add a markup for those expenses, whether you're using freelancers or contractors or any third-party suppliers that you work with. It's very important to kind of set them up with cost rates for each expense, and sell how much would you be selling that to your client with a markup, ideally.
Exactly. So here, for example, we've got John Smith, a photographer who we use quite regularly. Now, we know that John's daily rate is $400, and we often sell that work on for $600. So there's a bit of a markup slapped on there. At this point as well, we might be linking this up with Xero or your accounts package, assigning those revenue and expense accounts there.
It's been disconnected.
Oh, it's been disconnected.
Yeah, we just have to reconnect.
I'm not sure I want to do that right now, but right here in the back end is where we'll be able to assign those cost and sell rates, ensuring that markup is attached to the expense from the get-go. So those are two areas where we'll set up those costs with those respective margins as well.
And to understand a profit on the job, in Streamtime, the way we would do it here is to go and create a report on how much profit are we making from time and expenses, and maybe we want to see a total profit as well. So total profit, they combine profit of time and expenses profit.
Exactly. So here in our jobs list is where I'm going to just switch off a few columns and turn on a few others to get an eye for this profit. Now, I do want to keep the invoiced amount in there, and we'll talk about that in a second. But I might drag it a bit lower in this list, and maybe I don't want to look at my team. I might keep labels on for the moment. I won't pull the profit of expenses up a bit. I might pull that profit margin down a little bit. So we can see here, I've got the profit on my expenses. So any cost that we added to the job, what was the difference between the amount that they cost us and that we sold them on to the client for? The profit on time. So essentially that is all of the time that's been tracked on the job. We're looking at the difference between the cost rate and the sell rate on that job, on those items, on that job of the team members that were tracked.
Yeah, so you won't be able to see that profit figure, time profit figure, unless your team tracks time against the job.
Exactly.
So it's very important, once again, to, we're making it as easy as possible for you and your team to track that time. So it's very important to do that consistently.
Exactly. And if we are on a job, just so we can get a quick glance at what we're looking at when we are considering that profitability, it's really the difference between these two figures here. Yeah. So we're just looking at the used time at the moment on the job. Danielle and Patty have both tracked a total of 27 hours here. Now, all up, that's cost us as a business $3,090, but that work has been sold for $7,230. Now, before, when we were on the team setup, we were looking at the billable hourly rates that those team members had assigned. Now, the rate that we're seeing sold here is actually being pulled from these items itself. Yeah. So we know that there are a few different ways that we can price our work in Streamtime. We do have this hourly rate at the item level, which is essentially all design time in this instance will be sold for $200 an hour. And that's giving us this total of $3,000, where this 15 hours is a bit like a bucket of time that a few different team members could work at, all being sold at the same rate. If we did have a team member working on this, we could actually opt to use their hourly rate. For example, Danielle, now we've given her that promotion, is going at a much higher sell rate. So we can see that the total amount of time that is being sold there is a bit higher.
Yeah, exactly. So maybe Danielle is a senior designer. That's why this design item is much higher than the normal rate.
Exactly.
There are two ways for you to do that.
Exactly. And maybe you even are operating from a fixed fee. It happens in some studios, regardless of how much time we spend on this design work, we are going to spend maybe $4,000, or we are going to charge $4,000 for it, for example. And in that case, the hourly rate is being calculated by a division of that $4,000 by the 15 hours time required to get it done, giving us $267. Now, when the team tracks time, the sell rate we're going to see is $267.
Yeah, not their own billable.
Exactly. So that's where we're looking at to get that profitability. Yeah. And that's taken from essentially how we've priced the job, what we've quoted the client, which is really cool.
Exactly. Once you understand that, how we kind of do that in Streamtime, it's really good for you to understand how profitable your jobs are. All the jobs are, or that particular job. So it's very important to, spend some time, maybe have a look at those rates and how are we actually pricing those items and the different ways of doing that.
Totally. Are you maximizing your opportunity for profit on those jobs?
Yeah.
Could those margins be improved? It's a good question to ask. And very flexible as well, so you can play around with different options. So coming back to this panel, we are getting a quick breakdown at an overview of the profitability of the job. At a very quick glance, we're able to kind of distinguish the difference between these two figures here, all up on the job. And you can see I've now got time, expenses, and purchase orders showing, which means that we're looking at all those costs on the jobs. So we're looking at time and expenses together, costing us $6,390, but we're selling it for almost twice as much, or even a little bit over twice as much, which is cool.
Great.
So it's a nice margin on there. Now, in order to see those total figures, we're going to be dropping back into this list area here. Now, at this point in time, I can see that I've got a lot of profit columns showing. And I've got my invoiced amount. The one we haven't talked about so far is the profit margin. Now, do you want to tell me a bit about the profit margin?
Yeah,
Chloe?
so profit margin is profit of all time and expenses expressed in a percentage for you. So basically, it's all the time and expense, all profit of time and expenses divided by what's been invoiced.
Okay, cool. So in this instance, it's really this $9,425 figure, which is the
Total
addition
profit
of all of
time
my
and
profit
expenses, yeah.
divided by that invoiced amount, giving us 76%. Cool. So in this instance, it's nice to have that invoiced amount here, so you can keep an eye on that and just make sure that that profit margin is looking on track. Now, these margins are very hefty, which is nice. Seems like very expensive jobs, but that's all right. Sometimes it's got to be done. Sydney's an expensive place to live. We've got to pay the bills.
Oh, exactly.
And you can see at the bottom, we're getting an average profit margin figure from that job. So that's how we calculate profit margin. If you guys have any other thoughts on how that profit margin is calculated, I can see that Rob from Paper Miss is here. We've had some discussions there about how they look at profit on a job, which is really cool. So if anybody else does want to weigh in on that, we'd love to hear it.
Yeah. Also, how often do you look at those figures? You know, do you wait until the job has been completed to understand how much actually final profit you've made for that job, or do you continue looking at it every week?
Well, that's a great point, because we are looking at this profit margin here. But one thing you'll notice, guys, is that we don't actually have a profit margin for some of these jobs,
because those jobs are still live.
Well, because they don't have an invoice.
Oh, yeah.
So the profit margin is calculated when that total profit can be divided by an invoice number. Now, if you don't have an invoice on a job, whether it's just a draft, whether it's been sent or not, we can't actually give you that profit margin figure. So understanding that an invoice is a crucial part of calculating that profit margin is really important. And whether you are doing 50% upfront payments, a lot of studios tend to do that to secure revenue before they get started on a project. If you are doing that, then you'll start to see a bit of a profit margin figure come in, and that will obviously change as costs attract against the job. Rob's mentioned that they look at profit margin a few times a week, so keeping a constant eye on it, which is cool.
Yeah, and also great to kind of create that favorite report for yourself as well, to just come back to it and have a look every time you would like to see the overall figure for your studio, or even for a particular job. Exactly.
Now, what I might do before I get creating this favorite is I've also got this labels column turned on here, and I might want to exclude a few jobs from here. So I can see that there are a couple of internal jobs, and whilst it's important to kind of keep an eye on those, they're not really useful for looking at profitability. Obviously, we're not going to be selling that work.
Yeah, so they're non-billable.
Exactly. So I'm going to remove all jobs that have a label that mentions internal.
Yeah, I would like to point out here that's really important to separate those non-billable and billable jobs for these exact purposes. Otherwise, it's not going to be the information that Streamtime will provide. It won't be consistent. And yeah, so adding those labels for the internal jobs and non-billable jobs will benefit you in the future, and when you're trying to understand how profitable your business is.
Exactly. And I've just also removed the opportunity labels there. Opportunity might be a label that we use on jobs that we're trying to gauge potential revenue might be coming through. They haven't necessarily been locked in or turned into an in-progress project. So we just want to remove those because they might be messing with some of the figures here. We just want to clean up this list. But now I've got those filters applied, I might just save this as a favorite. So maybe profit in progress is what I'm going to call this report, and I'm going to save it. And now I've got this favorite saved. I can see it here in my list of favorites that I can always come back to, which is nice. Streamtime's just going to remember those columns and filters that we'd applied.
Yeah, so this report will be constantly updating. So you can have a look at it as raw few times a week if you like.
Exactly, to make that easier, making sure you're seeing the exact same list each time.
Yeah.
Because if you do need to export that to a CSV, if you are keeping a big spreadsheet somewhere, it's nice to know that you're getting the same data pulled through.
Yeah.
Now, one thing you mentioned before that I think we should talk about more.
Sure. Non-billable and billable.
Yeah, let's talk about billable and
Sounds
non-billable
good.
projects
I was
and
just
why it's
thinking
important.
Maybe we should answer Patty's question. Patty.
Oh, hey, Patty, nice to meet you.
Patty's question on is it important to click the tick and lock of an item in the project to calculate the total profit in the project? As we mentioned, so we start calculating profit once time has been tracked. So you will start seeing how much profit are you making. But to see a total profit on a project, on a job, yes, so all the job needs to be completed in order to see that. But you don't have to actually complete all the items.
Right. So I think, so in order to, do you mean to see the profit margin on a job?
Yeah,
Is
I think that's what Patty means.
Okay.
If you want to see a total profit on the job,
Okay.
the job needs to be completed.
Right. So if we do want to see the profit margin on a job, we do need to either complete the job or archive it. Then it will surface on that job. And we do that because at that point, it's kind of safe to pull this figure onto the job here. Although it hasn't seemed to, we might just refresh that one. But in terms of calculating total profit in a project, Patty, I think that total profit will be populated as costs are tracked against the job. It's not necessary to kind of lock them down to be able to see a profit figure at any point in time, so long as there's potential profit being made on that job, which is going to be, the difference between a cost and sell number of hours and the expenses, then you're seeing it there. But now we've got that job locked down and archived, we'll see the profit margin appearing here on the job. Cool.
Awesome.
Easy. But let's go back to billable and non-billable time.
Sounds good.
So it's important to keep an eye, or at least to track billable and non-billable projects, jobs, whether that's just internal work or whether it's, work that you guys have taken on for free. If that's what you wish to do, then it's important to keep track of it with a label. And the reason for that is just so you know how much time is being spent on those things. If you do have internal, targets set up where you want to spend 80% of your time on billable time, 20% on non-billable time, it's important to know that we can report on this. And we'll use labels to do that. So I think contains internal is a good one here because I knew that it was sitting on a couple of jobs before, and I can see here, yep, there are a few internal jobs that we've got set up with quite a bit of time tracked against them. Now I'm in the time list, and this is just showing me all of the time that's been tracked against these jobs.
Yep.
I could, if I wanted, opt to look at this by team member to see where this time is actually spread across the people in my team. I might even look at the date logged too. So I might say last month, and we're getting some of those figures here. So if you do have those goals, you can kind of come in here, set up these reports, which are, all right, looking at my non-billable time, which is using this label internal. We could combine multiple labels if we wanted to see, okay, well, the total number of hours there was 21. That's what it cost us. But having a sell rate against the team member there is quite important as well, or it's a nice to have, because what that's showing you is the potential sell rate of that time, the potential sell value. So, well, hang on a second. If we hadn't spent all that time on those internal projects, what was the amount of money that could have been recovered? Yeah.
I think Andy, our managing director, told me once that for the people, the agency that he owned before, they were tracking time against how long they spent playing Halo. And understand actually how much it costs them as a business playing Halo. So yeah, I mean, it's good for you to understand how much is it costing you, and also it's a positive thing and can be a negative thing. Actually, looking at that sell rate and how much money would you be making instead.
We should probably set up one of those jobs here. We spend a bit of time playing Halo every now and then, mainly on Friday afternoons, but.
No, I don't know how to play.
So looking at these job labels, it's easy to get a very quick comparison because we can just flick between a job label containing internal and not containing internal. So what that's doing is essentially flipping the report upside down on its head and looking at the billable time that month. So 175 hours and 45 minutes all up there compared to that 21 hours. I think that's an okay balance.
It is.
When it comes to looking at time that we're going to be selling and not selling. So
yeah, and yeah, it's not like we are saying you shouldn't. You should tell your team not to work on any internal projects and keep working on this, on a billable project. But any internal work is contributes to your billable projects. Maybe it's something to do with marketing and sales, and working on the pipeline as well. So it is important to have.
Exactly.
But it's just important to track and understand where your team time goes.
Definitely. So starting with a few labels that you might use for different types of projects that you may or may not bill for, understanding, or at least having the team understand that that's where the time needs to be tracked. Knowing how you can use these filters to refine these lists to show time in a specific time period, I suppose, between dates, is cool. And then knowing that you can just save that as a favorite as well. So you can always come back to it and get a quick glance at the difference on those hours, or at least the profitability at a top level. And of course, then we can kind of apply what we've used there to this list as well, keeping in mind that we've got these different columns showing us different figures about profit. Now, I reckon that's probably enough from us, and it looks like there are a few questions flooding in. So I can see Michael has gotten to a couple of those, which is awesome, but we might take a quick look at them and chat about them. So Luke's got a question.
What about when planning out a job for quote pricing where profitability is the key factor? In the future, it would be very handy to be able to see the profitability of a job plan in Streamtime before time is actually logged or invoiced. Okay, look, that makes sense. And I could see that Michael has responded to you on that as well. Well, we have a theory around that, do we? In Streamtime, we don't actually show a forecasted profit on the job because it's really hard to know whether it's going to be consistent, if it's going to stay this way, because team changes all the time, or your team priorities might change during the week. So it's really hard to predict that profit straight away before tracking time.
It is tricky to know who's going to be spending the right amount of time on those, knowing that they're coming out at different costs. That profit figure is always going to be a pie in the sky number, and it could be, a rough guide, but the margin for error in that figure is quite large, I think.
Yeah, we don't want to promise you something that this is how much profit you're going to be making and then end up with a different figure just because one of the senior designers is sick, so someone else is doing their job.
Exactly. So we had a question from Josh. You calculate profit margin by dividing all expenses divided by the invoiced amount, but we need to see the profit margin before we have invoiced. This helps us run the job profitably. We would like to see the profit of our expenses and use time divided by our planned sell. Okay, so I think that profit, that is more of a predicted profit margin, I think, which is kind of, it's a reflection of what's been logged so far against the job, but I don't think it would necessarily be called profit margin in itself. Profit margin is really can only be calculated off revenue that's being made back into the business, which happens when that invoice is being created. So I kind of understand what you're after there, Josh. It is a part of some conversations we are having internally here around profit and how that's working. But in terms of profit margin and why we're surfacing that, that is really only pertaining to the fact that there is revenue coming in, which we're getting from the fact that there's an invoice being created.
Exactly. So just to secure yourself, the invoice has been created, it talks, then we will be able to calculate the profit margin. If the invoice hasn't been, you can actually maybe try and calculate that yourself to estimate the profit margin, but it's not a profit margin in a way.
Exactly.
Yeah.
So Carl's got a question here as well. G'day, Carl. I was just caught up with Carl yesterday. You mentioned that the hourly cost of staff is based on their hourly rate plus super overheads, but there are studio head and overhead costs as well. How should you capture these, or does that not matter in terms of measuring overall profitability? I think, Carl, it's important to figure out what essentially that overhead cost is per team member. How much does it cost to run them in the studio? So that includes computer setup, office, all of these other general expenses. I would suggest finding out what that is, what that fixed number is, and just adding that to the cost rate of each team member. I would suggest bundling it in, just making sure it's being considered in a part of that process. That way, when we're looking at profit, we're kind of getting a closer idea in terms of money in, money out, so that those things are being considered too.
Yeah, cool. And all right, Patty,
we've already had that question.
Okay, we've got Caroline. Do you need to have a cost rate, hourly rate for individuals noted in the system in order to calculate profit accurately? Yes, very important to add it in for individual. And if yes, does this rate need to be visible to everyone in the team, or can it be hidden? It also can be hidden, Caroline, so you can actually restrict some of the team visibility or not seeing any of the cost rates. I mean, it's totally up to you how you like to do it, but I would restrict some of the team. Yeah,
when it comes to cost rates, it is relatively sensitive information for people who aren't necessarily running the business. So we do, that cost rate should be an option against the team setup, Carolyn. So when you do go in to add the cost rates, just down below that, you'll see the checkbox areas, which I'll just jump to here for cost rates. So your team, Danielle Wilson, cost rate is a box here which we can turn off, and the team can then see or edit the cost rates of team members. So that will be, that's going to answer that one. Got another question from Carl.
Are there standard benchmarks for billable rates per month for staff, for example, utilization rate expressed as percentage?
Different studios have different ways of measuring what those benchmarks are, or what that margin is. I think a 30% profit on a job is something some people like to kind of use as a guide. So I'm sure with a bit of research, you could certainly find what that is, Carl. Otherwise, if anyone else had any suggestions in terms of what they kind of use as a measuring stick for those markups, then Carl might be interested to hear that too.
Yeah. And Caroline, question on expenses as well. How do you suggest recording or tracking actual expenses versus budgeted expenses on the job? We actually had that question before, and we are discussing that internally as well. Some of my clients were wondering that too.
Cool. I think there is a little solution there for you, Carolyn. And essentially what you're doing is by having a budget expense and then the actual expenses once they come through on a job. So for example, let's just say on any particular job, maybe this one, we might want to add an expense that we'll be budgeting, or we'll be adding this to the quote. Let's just say cost budget, for example. Now we'll come to more options down here, and I want to add in a sell rate. Maybe on this job, we're budgeting $1,000 worth of expenses, but what's that costing us so far? Really, it's costing us $0, but we're going to be selling $1,000 worth of budget. Really, that's what we're doing here. So I would save this one to the job. Now, what's happening in that process is that you're not actually tracking any cost, but obviously you've opened up that $1,000 worth of budget to use. So when those costs come through, you'll just want to make sure that you're just adding a cost against them. So let's say, oh, yep, there was some printing we got done for this job. Maybe it cost us $350. We just simply don't want to add a sell rate here because we know that that sell rate has already been catered for in the budget. So you can now save this. It means that when we are looking at a breakdown of those expenses, you'll see that you've got that cost budget giving you that $1,000 of sell, and then that printing just giving you the $350 cost, which is balancing each other out in the total down the bottom here.
Yeah.
So that's how I would suggest managing that, Carolyn.
That's amazing. Thanks, Patty. I actually didn't know that myself. So I just learned something new. Yeah, thanks, Caroline, for the question.
Cool. Awesome.
What time is it?
We've gone a little bit over time, 34 minutes. Sign of a good webinar. But thanks everybody for getting involved today. There's quite a bit happening in the chat here, which I'm keen to have a read about later.
Yeah, and Luke, thanks so much for responding to some of the questions and giving ideas. So thanks so much for participating.
Certainly. Yeah. Great to have you guys engaged and involved. If you have any other questions, just get in touch through the help menu.
Yeah.
But otherwise, we'll see you next week.
See you next week.
Okay.
Thanks, guys.
Bye.